morning, everybody. How's everyone doing today? Wednesday, it's hump day. It's April 26th. Let's get started here. So, a brand new trading day, and we're going to do what we do best, which is go through all of the pertinent data points for our market here this morning. I think it's worth at least mentioning, of course, the title of today's video. So, Microsoft severely outperforming after earnings, right? And the number was released. However, we have Google weighing down on the market. And just from a technical perspective, we did break down underneath support yesterday to some degree, right? So although yes, the market did have a change in tone yesterday, we broke under support. We got a nearly perfect retest of the breakdown level. Should have offered up some entries. We talked about it in the Discord. Right? Although the market's breaking down, although yes, there was some momentum on yesterday's session, let's be very clear, did the S&P, the SPY specifically, break down underneath 406? The answer is simply not yet. So we're not there, we're not all the way there yet, but pretty damn good. Pretty damn good yesterday, getting some continuation out of this market, not just some whipsaws back and forth. So good morning, everybody. Good morning, good morning, good morning. It should be a very interesting, fun day as the market starts to show us, hey, maybe we'll get out of this range, and perhaps it's to the downside. Perhaps it's to the downside. All right, so could there be a trend reversal underway? It's possible. It's definitely possible. So we'll take a look. We will take a look. Here we go. Let's run through our economic calendar. Of course, today is Wednesday, April 26th, as we just said. And we have durable goods coming out at 8:30. That's in about 13 minutes. And the magic of starting the stream at 8:15 is that for the most part, we can see what the market's reaction is every single time to any of these announcements. So 8:30, durable goods. Tomorrow, Thursday, the most important things coming out are going to be the GDP and unemployment claims, as they typically do. Unemployment, that is. And then on Friday, this is the fireworks day. We know that we're getting the core PCE index as well as employment cost index just to see if there's kind of inflationary forces coming in from wage price spiral perspective, right? Do employees cost more than they used to, basically? And is it moving at a more rapid clip than it used to? Okay, so that's the big deal into the remainder of the week. Advanced GDP and PCE tomorrow and Friday. So knowing that, let's continue along here. Anything stock specific on the headlines this morning? Top line figures are all green except for oil, which does strike me as being kind of odd. We're definitely up off of the close of the prior day's session, but we're certainly not, let's not pretend we're gapping up here. We're not gapping up. We'll take a look at the charts in just a second, of course. Bankers pitch how to save First Republic Bank. Help us now or pay more when it ultimately fails. Blocking Microsoft's $69 billion acquisition of Activision Blizzard from I believe it was there's a more fancy term for it now. I forget, I'm blanking on it off the top of my head, but basically they don't want to make a monopoly. So Britain blocks that deal. What else is going on here? Boeing plans to boost 737 MAX production, 38 planes per month. That's quite a few planes. That's a lot of planes. Do they have the buyers is, of course, the question. Boeing reported earnings before the open here this morning. What else is going on here? Big money donors, this, that, the other thing, political, that, whatever. NASDAQ futures rise after Microsoft beats earnings. I would say, hold on a second. Not so fast, right? Google is still down. We're still underneath a key level out of the NASDAQ 100. Analysts are getting even more bullish on Microsoft's AI prospects after the earnings report. So here we go. I guess buckle up for the AI mania to continue, right? Meta just suffered a major Facebook ad glitch that has advertisers asking about refunds. So as we know, Meta earnings can be extremely market moving because of the implications on ad spend, right? So when we learn what the Meta earnings look like, depending on what comes out of the ad spend section of the earnings call, I think we'll see some pretty decent market reactions based on how Meta reports ad spend. Anyhow, what else is going on here? Target rolls out curbside returns. Mortgage demand rebounds a little bit here. Warner Bros. What else? Stock specific stuff. Downgraded Tesla Sees pressure on the EV makers' margins, which is no surprise. That should be kind of expected here. But the downgrade is, of course, useful as a catalyst. What else is going on? Alphabet reports revenue and earnings beats for the first quarter. Not really rewarded on that so much, probably because of the AI competition, because we can see just underneath Microsoft reports earning beats, says that AI will drive revenue growth. What else is going on? Stock-specific stuff. CMG, Chipotle, big beat, right? Doing pretty well. Chipotle. A lot of people joking out there like, hey, I eat Chipotle every day. I'm the reason the stock was going up. Who was it on Twitter? Sam Rowe, maybe? Sam Rowe. Anyhow. Oh, here's an important one. This is at the very bottom. They snuck it in there. Google's cloud business turns profitable for the first time on record. Interesting. So the cloud business is making some forward progress there. All right, enough of the economic and headlines there. Of course, let's just look at the calendar itself. This was the big deal after the close. Enphase took a hit, of course. Chipotle did okay, and Visa, I'm not sure. How Visa did. Before the open, it was all about Boeing, which we just saw the headline about the expanded production of the 737. After the close, we're getting Meta, market moving, as we just pointed out. Roku, possibly. After that, again, things get interesting on Thursday. We'll talk about things before the open tomorrow on the stream. So let's take a look at our not Russell. Let's go back on over to the ES, and we'll go on up to that good old 4-hour time frame chart. So good morning, everybody. Thanks for tuning in. Appreciate you being here. Good morning. Nice to see you all. Visa beat. Thanks, John. Appreciate the heads up on Visa. So ES, 4-hour time frame chart. I mean, if we're being honest with ourselves, this is still just a very mild pullback in the context of an overall uptrend. Is this trend line breaking down? Absolutely. Let's be very clear, right? In the context of the move off of the lows from March, this is still just a mild pullback. It's not like we're hanging out down here at 3,900. Could we get there sooner than later? It's possible on a large breakdown, but for the most part, let's just remember that the tailwinds are still behind us, pushing us in the upward direction overall. And we're sitting at the key support that keeps the tailwinds in play. If this level starts to break down, we can obviously build the case that, hey, things could get nasty fairly quickly. Okay? So, again, 4-hour chart. Let's be very reasonable about what we're looking at here. We still have not broken down underneath this key area of support. That's 406 on your SPY. We talked about that in the weekly watch list update from Sunday. And it also just represents the original balance range lows. And that's exactly where we find ourselves on this morning session. Now, we find ourselves here under different circumstances. Obviously, if we zoom into the price action, again, this trend line here broke down on yesterday's session. You can see support, trying to find support. We broke down. So we've closed the triangle. We call this filling up the triangle. Boom. That's this move right here. And we find ourselves at support. So we're still inside of the original balance range. Let's go on down to the hourly time frame chart and point out what's going on. So yeah, I mean, support broke. Absolutely. And once again, we're at that support from the 4-hour balance that we just saw. And something to at least consider as we move forward is this resistance trend line right here. Could we be in a hourly downtrending channel like this? Absolutely. Obviously, we're underneath the downtrend channel as of the close yesterday. But considering this was the first momentum style trade that we had in a long while, I wouldn't be so concerned. Really, this is more indicative of balance in here, and being extended through a downward sloping support trend line isn't really telling us all that much. It's really all about the resistance trend line in a downward sloping channel, of course. So anyhow, noting those two things, obviously we're dealing with a 4-hour attempt at a still higher low, but on the 1 hour, now we have certainly flipped into a downtrend and we're sitting on a lower low. Are we not sitting on a brand new hourly lower low? We absolutely are. So, knowing these things, as we talk about trends, as we talk about trend analysis, does it make sense to be going short at a lower low? Not really. You want to be looking to short the lower high or the EL equal low BD breakdown, right? This was a bunch of equal lows breaking down. These are brand new lower lows as of yesterday's session. And sure, in the pre-market, you could look at this as an equal low breakdown. It's certainly a possibility, but as we know, I typically tend to not think of the overnight session as being overly important from a structural perspective. Of course, the reason being is just that the volume is not there to back up the participation at those particular levels. Okay? So anyhow, noting that, sitting on a lower low at a known area of support from the overall balance range that we just saw on the hourly and 4-hour time frame chart. Here's the original balance, right? SPY 406, SPY 406, SPY 406. We're sitting right on it. So is it at least worth being open to the idea? Again, is it at least worth being open to the idea that the market could see a reprieve on today's session? I think it's worth being open to that idea. I don't think it's worth just saying, okay, the market's going to go to, 3,900 or something like that on today's session. It could happen, but we could also bounce off of support here. Let's not fool ourselves, okay? So I want to be very, very clear. We're acknowledging that, yes, the hourly trend here is definitely in a downtrend. Yes, we did see some significant momentum in the downward direction yesterday. But how do we trade this going forward? I still think I still think the correct way to view the market currently is to be responsible and respectful of this area of support here around 4,100. It's noteworthy, okay? I'm not saying that the market can't break down, but I'm saying we could also bounce here. All right, that's kind of, and I know you're like, hey Matt, you're saying we could do anything. Well, technically, yes, the market can always do anything it wants to do. I think it's worth being respectful of this level of support. And again, let me show you why I think it's worth being respectful, because even if we do break down, there should be an entry. Was this not the most beautiful thing you've ever seen yesterday out of the S&P? I mean, come on, you can't ask for much better. We break down through the level that we were discussing pre-market, right? We were saying, hey, I don't really think it's wise to be shorting through this breakdown. Look for the retest. Look at the retest. Could you have asked for anything better out of the ES or the SPY yesterday? I mean, nearly perfect, right to the tick, and then you get your flush, right? So I think the same thing applies with where we're opening on today's session. We saw what happened yesterday, right? We opened at support. There was a little bit of a bounce out of the gates, but we flushed it, right? The bears did their job finally, and then we were offered the perfect opportunity for a retest short. Fantastic. Picture perfect. Put it in a textbook, right? So I think the same thing applies down here at 4,100. I think that we can be open to the idea that the market could bounce, and if it does, fine. We're bouncing off of support. We'll look for, again, now that the hourly trend is firmly breaking down and we've produced lower lows, I think it's reasonable we get a counter trend, and the idea is to do what? Just look for a lower high. Look for a lower high on the hourly time frame chart. Where does the lower high want to form? Well, ideally, it's lower than this retest in here, right? And we get something that does this arbitrarily in here. I would say that you may want to watch for this at 41.25, the equal low breakdown level after the retest. That would be an area I would at least monitor or keep on the charts to some extent. However, anything that just remains underneath 41.38, 41.37, this zone right up here, is still just an hourly lower high, right? This doesn't really show as an hourly lower high. It shows as a straight shot through support. And now we could do this and then that into perhaps Thursday or Friday, right? So let's not get ahead of ourselves. We're talking about overall signals right now and just ideas based on the hourly structure. Let's not get ahead of ourselves. Let's go ahead and ask the three questions that we're always asking. Question number one, where are we opening in relationship to the previous day's range? Here's the previous day's high. Here is the previous day's low. Obviously, we are opening in range, which is always a balanced indication. So we ask ourselves question 1.5 here, where are we opening in relationship to the value area? Here's value area low. Here is value area high, almost tangled up with the previous high of day. So value did not shift all the way lower with price yesterday in the ES specifically. I'm not exactly sure where the point of control is. We'll take a look at the market profile, and I'll get the point of control for you in just a second here. But in terms of where we're opening in relationship to the value, we're opening underneath, right? So that's a little bit more of a bearish indication. You can see we're rejecting that currently in the pre-market. It acted as support. Now we're already getting a break, retest, and trying to reject it here. Now, what did I just say a moment ago? Typically, the overnight session does not count for as much as the regular trading hour session. So I would just take this interaction with a grain of salt, right? Just take it with a grain of salt. Sure, we're rejecting there, but for the most part, it's where do we open? And as of right now, we're opening underneath the value area low. Okay, we've covered that. Question number 2, where are we opening in relationship to the overnight range? Here's the overnight high, here is the overnight low. A little bit of a rally out of the Microsoft earnings, out of the gates. I will also add, out of the gates, the Google earnings actually held up. It actually held up, Google. But as we approached the open, it certainly faded. So Microsoft tried to save the day, but unfortunately, it doesn't look like it's enough. I mean, this push did not stick. We're currently opening kind of in the midpoint, I would say maybe at the top edge of the lower third of the overnight range here, which is, it's not really all that indicative of something to do as soon as the market opens, right? As soon as the market opens. So I would say that's a fairly neutral indication. We're not opening close enough to the overnight low for a risk reward setup here, which is also very close to your previous low of day. And we're also not opening close enough to the overnight high to set up a risk reward trade. So I think number 2 can fairly be neutral. Question number 3, last but certainly not least, what's the overnight inventory position? Net long, net short. To do that, of course, you just extrapolate the settling price. Same thing as saying the close. How much time spent above, how much time spent underneath. And what you'll notice is it's about 50-50 in terms of distance. I would say the shorts obviously have a bit of an edge here, actually. But let's be realistic, right? Some time was spent above, a good chunk of time, literal time. But in terms of price by volume, obviously there's some more interactions taking place underneath. I'd say we're net short, but it's not overly skewed. We're not 100% net short. We're probably something like, 65, 70% net short. Let's go 65% just because of the rebound that's happening off of the overnight lows currently as we're speaking, right? This is kind of neutralizing things to some degree, a minor degree, but to some degree. So, okay, we've answered the 3 questions for the morning session. And, I think what they tell us is what they always tell us when they are poised like this. We are looking to be patient on the open. We are looking to possibly have more of a bearish slant to our analysis because we are technically opening underneath the value area. And we're not really opening close enough to the overnight high or overnight low to set up a risk-reward trade there. So patience out of an opening range. Considering this is happening on the back half or the back segment of a big breakdown yesterday, I think it's worth noting that there is some bearish momentum in the market. But as we talked about on the higher time frame, specifically the hourly, as well as the 4-hour, we're pretty much opening dead on support after producing a lower low on yesterday's session. So is it reasonable that we bounce off of support and search for a 1-hour lower high? I think the answer to that question is absolutely. I think that's a reasonable assessment for the market. I think if we break down here, just like we talked about yesterday, you don't want to be the trader who shorts through the breakdown. Your job is to just look for the lower high anywhere underneath 4,100. So I think we basically have a repeat of yesterday's session, yesterday's open on our hands here. I think it's worth being cautious of opening at support, noting that we can see a counter trend move to produce a lower high. Hourly still remains in a downtrend, like bears, don't lose it yet. We still remain in a technical downtrend on the hourly, looking for the lower high. Or we flush the lows here, that's fine. You don't need to be the first one in the door, just look for a lower high underneath, and we'll trade in the downward direction, exactly like what happened here on yesterday's session. I mean, again, folks, this was textbook. Put it in the history books, put it in the trading books 101, whatever. I mean, that's it doesn't get any better than that. All right. So that's what I've got for you out of the ES on this morning session. Let's go ahead and draw in some scenarios, and we'll think about what could unfold here. The market's not really moving. Remember that we were set to get some news here at 8:30. I believe it was it durable goods? Durable goods came out at 8:30. The market's not really doing a whole lot of anything impressive, so I guess that was a nothing burger. And earnings, earnings trounce the importance of the durable goods order. So anyhow, what does that leave us with for scenarios? Okay, so we're expecting opening range, right? Opening range kind of does whatever it does. Ideally, when I draw in squiggly lines, the market does stay exactly where I've drawn things in, but it's rarely the case. Of course, this just represents the market finds and respects a high, finds and respects a high. Same thing with the lows, same thing with the lows. Once we've established that little range, again, don't ask me what time frame is best. It always depends on your time frame of comfort, not mine. You've got to figure out what works best for you psychologically. If you want to be textbook old school, opening range, opening balance based on a market profile indication is the first 30-minute session of the day, first 30 minutes. For me, I think that's too rigid. I think you should respect the range that forms regardless of time, right? So it could happen on a 5-minute chart. It could happen on a 15-minute chart. It could take 30 minutes, like the classic opening range. It could take an hour. I don't know exactly how long it will take for the opening range to form, so don't ask me that question. It's anybody's guess. What you're looking for is a set of highs to be respected, and what you're looking for is a set of lows to be respected. Once we have that, we have an opening range. And then as we know, there are 4 trades that take place. Breakout, breakdown, fake break, even more powerful through the bottom with trapped longs here. Fake break through the bottom, then through the top, even more powerful of a long signal with shorts trapped on the downside. Those are the 4 trades always whenever we're dealing with a balance range, okay? So those are all on the table. In terms of what I would like to see happen, in terms of my preference for the ES this morning, I think it would be nice to find like a test of the overnight high and look for shorts on lower highs further off of the lows in here. I mean, it's one thing if the market just continues to move lower on momentum, but I think it would be, in my estimation, from what I can tell from this market, it would be a bit easier to try to position short up against this for an hourly lower high, right? We're looking for an hourly lower high. Could it be the overnight high? Absolutely. Could it be this level that we just sort of alluded to moments ago, 41.25, the breakdown point from here and here? Yeah, it could be this as well. So I would carry forward a rally first is probably favorable. Now you might be saying like, Matt, you're so dumb, man. Why do you want the market to rally? Why don't you want the bears to just run away with it? Because I'm looking for the better, more precise entry. If you enter short here, dead on the lows, not only are you shorting a brand new lower low, you're shorting at a known area of support, which has offered a ton of bounces and fake outs in this range that we've been trading in. So again, just think about this logically. What has the persona of the market been over the past 2 weeks? The persona of the market has been like, we're going to fake everybody out before the move actually unfolds, right? It was so painful to look for a follow through short until yesterday came along with the lower high underneath the level. So sitting on a lower low, sitting at a known area of support from the 4-hour balance that we were just looking at, I think the most reasonable way to trade this is if the market rallies first, look for a rejection of the overnight high, 41.25, or some arbitrary lower high anywhere underneath 41.37, 41.38, this area in here. It would be less ideal, of course, to see a rally all the way up there. It makes it very difficult to actually short it on the back half of the day after the rally's been produced. The more productive short, as we know, is just, again, overnight high, this kind of structure in here, some clear indication that we're not even going to make it to the previous day's retest level here, right? So that's the ES on the upside. I think that's the more that's the reasonable way to get into a short setup on today's session. Looking for the rejection here, looking for the rejection here. All right, and I'll find, again, I didn't forget, I'll find that point of control for you in just a second. We'll look at the market profile. I would be thrilled if it's close to 41.25. If it is, we'll know that that's a decent short spot as well. Not because it's the point of control, because it represents structure here, but the point of control just adds confluence. Typically, point of control is a place to stop a trade, not initiate a trade. Anyhow, if the market does just break down, again, because I want you to be covered with all scenarios. So again, opening range breakout, that's fine. We're not really looking to play that breakout. We're looking to short at the overnight high on an indication, right? We're not just blindly shorting here. Inverted hammer, 5-minute double top, head and shoulders, whatever the trade setup is, some indication of weakness at the overnight high or 41.25. That's if we break opening range in the upward direction. Break opening range in the downward direction, right? We know the deal. Look for a lower high underneath, confirming the flush of the daily / 4-hour support here. SPY 406, ES futures 4100. 4100. It's got to be a lower high underneath if we just make the straight shot lower. Again, what's the reasoning for this? I want to be very, very clear. I want everybody to be on the same page so nobody falls victim to the fake out, madness of this market. What's the logic? Again, I just want to, because this is so important. If you can just understand this, you're going to save yourself a lot of headaches. So again, it's important. We're going to run through it one last time, and then we'll zoom out and I'll give you some downside targets if we do see the follow through move to the downside, and we'll find the point of control. The logic is we just produced a brand new lower low on yesterday's session. We are sitting at support. Is it reasonable that the hourly chart needs to look for a lower high before continuing the downtrend? The answer to that question is yes. We're sitting at known support. The persona of the market has been to be a fake out type move, FO, fake out. So if this happens, don't be surprised. Don't be surprised. Okay, look for the short here, look for the short here, 41.25. If this happens, look for the lower high underneath. Okay, we've been very clear about that. Let's talk about some targets to the downside underneath us if we do get the lower high situation. Let's go hourly time frame chart to search for this thing and see what we've got underneath us. Of course, we've got to go extended hours off. And what are we dealing with, right? So I would say that this comes into play, right? Let's go ahead and sketch in some boxes here. We're taking out our crayons. What's going on with the crayons? So I would say that this is probably, if we get a similar size breakdown to yesterday, that's kind of in the realm of possibility, 40.60. We had talked about this level in the past as well. Remember that we had 40.60, and then after this was established as upper wicks, it was this gap fill reversal, right? So as this original breakdown was threatening over here, before we knew the market was going to go into chop land, 40.60, if you recall from the streams, anyone who's been watching for a while, you remember 40.60, right? So 40.60 is the downside zone to look for if we start to see continued breakdown out of the ES on today's session. Okay, so that is the downside target, and let's go ahead and find ourselves that good old point of control. So let's go on over here, and tell me it's the level a little bit north, 41.29. Also, may I add, it would be a retest of the previous overnight low. Now, previous overnight low carries less weight than a previous day's high, previous day's low, value area high even, but it is technically a mechanical level building out here at 41.30. 41.30, okay? So that's kind of what we have here for a point of control. Carry that forward. So just going back to the 15-minute chart to show you 41.30, and then we'll move along into our NQ. 41.30 is just north of that technical structure in here. I would still carry forward 41.25. And the reason being, of course, is just because of the technical structure there, right? You have a low set, you flush the equal low, and what happens in this upper wick? Another opportunity for a break, retest, and lower. Okay? So 41.25 would still be a place to look for that lower high. Just treat this as a zone, right? This is kind of where you want the line in the sand, ideal lower high. We could still produce one underneath 41.37, but for today's session specifically, if we don't see the lower high here, it just complicates actually getting into the short for follow through into the close, right? You could imagine that it probably takes the market some time to grind up here. Oh, no lower high. Oh, no lower high. And we get to here. It's like 3:30 or something like that. Are you going to produce a big short into the last 30-minute session of the cash market? Probably not, right? So ideally, it's here, or ideally, it's here. A little opening range pop, and then fade. Okay? If we do this, we know we have downside targets 40.60 on the downswing. All right, the ES has been covered in its entirety. I also want to point out there's just a lot to talk about. I'll talk about all of this in tonight's midweek market update. But I mean, look at the stark contrast in internals now that true sellers have entered this market. Yesterday, the NYSE was basically sitting on -7-to-1 breath ratio almost all day. I think the best I saw it was maybe like -5, -4-to-1, but other than that, it was sitting on -7, -6, -8 at times. I mean, this is clearly an indication that there's new momentum coming into the downside for this market. The advanced decline line, instead of trending off of the lower bound, it stayed in the lower bound and actually got worse. Look at the cumulative build out of the tick. I mean, this thing just, it really built out yesterday, worse than -5,000. I mean, it goes without saying. You have to acknowledge there was a change in tone yesterday in this market, right? The sellers are here. So for everybody who said, or for everybody who may perhaps comment on the Sunday video saying, what an idiot this guy is, I just know they're not tuning into the live streams, right? You've got to have a very flexible mind. If you're going to be a day trader specifically, I mean, let's be very clear, right? This, and this will all get discussed in tonight's video, represents a change in tone. So yes, sellers are here. Sellers are here. Good job, guys. We are not as disappointed in you this time around. All right? You guys did something nice. So thank you, sellers, for producing some continuation out of the market. All right. Let's maximize this and go back to the NQ. We'll keep this train moving. We'll take a look at the /, we want /NQ. NASDAQ 100, 4-hour time frame chart. What's going on here? All right, so let's take a little bit of a zoom. We know that the NQ was weaker. Again, this should not come as a surprise. We know that the NQ was weaker. This was great, but this represented much more of a balance. We did not produce the higher high on the Tuesday session of last week. We know that this overall downtrend is, it's been in play longer than the ES, considering it never produced a higher high. The lower bound of the channel we're opening back inside of after exceeding it on yesterday's session. So a little bit more respectful from that perspective. We're also, this is very noteworthy. This is very, very noteworthy, okay? This low, there are these low sets, I should say, in the NQ represent the equivalent of roughly 4,100 on the ES. Where's the NQ opening in relationship? Underneath. It's opening underneath, right? It's opening underneath already. So where the ES is currently opening above its key support or at key support, the NQ is opening underneath. So is there a clear sign of weakness here? The answer to that question is yes, right? And I suppose if you want to get really technical with me, this represents ES 4100. This represents 4137 ES. You could get technical with me. That's fine. But for the most part, I would just say if we're thinking about where we're opening relative to support and resistance, this is opening underneath support. So now it should act as resistance. That's the main takeaway from the 4-hour. Let's go hourly. Keep the train rolling. Hourly chart. Let's take a look at our trend channel. We are currently in a downtrending channel, something that would look like this, of course. We are coming off the bottom end of support. And is it logical that we could look for a lower high? Again, the same logic applies here as to what we were just discussing in the ES, but the difference in the NQ is that this is already acting as resistance. I mean, look at what happened. Sure, we rebounded from earnings as they were reported out of Microsoft and Google last night after the bell there in the cash markets. But where did we find resistance? We already found resistance on the back test of this area in here on the first go around when earnings were first coming out. Now the market's trying to get back towards that area, but we're testing it from the bottom. So again, what's the idea here? The idea is that we've already broken support. You're just looking for any excuse of a lower high weakness around 12,975, 12,950. 12,950 was the line in the sand we were using, but this is a zone. Remember that this is a zone. So any weakness in this gray bar, any weakness underneath the overnight high, I think it's reasonable that you look for this market to roll over and continue in the downward direction. We know that from the hourly trend channel, if we were to be opening where we're slated to be opening here, we're very close to the top of the trend channel. So could this be an hourly lower high opening in here? Absolutely. We're pretty far away from the lower low, right? Whereas the ES, not so much. The ES is not so much away from that lower low, which is why we're looking for the lower high to be produced. So if the NQ rejects here and rolls over, again, remember your intermarket dynamics, it probably means that the ES isn't really going to find a meaningful hourly lower high. If the NQ is rejecting here, which is the heaviest weighted component basically via tech as a proxy, right? For the ES, then again, you're probably not looking for, you don't want to see out of the ES a 41.25 lower high, right? If the NQ is rejecting here, you probably want to see an overnight high retest and rejection out of the ES. All right, so just keep that in mind. If the NQ is struggling here, don't be looking for a massive lower high out of the ES. Just be mindful that, like, hey, we might get a little bit of lift. Maybe don't short right out of the gates. But once we start fading off, once the NQ starts rejecting this zone here, that's where you can kind of go pedal to the metal with shorts and look for, continuation type moves. Of course, hopefully, to target the lows of balance, 4100 ES in the NQ, we're looking for the prior low of day. And we also have to adjust our gap here. So let's adjust the gap. Let's find some lower targets. It's just the gap close. I'll tell you right now. It's just the gap close. And then we'll go from there on the 15-minute time frame chart. So extended hours off. Let's adjust our gap to its rightful amount of fill. So boom, do something like this. It's going to continue to fill regular trading hours underneath the previous low of day, and our target is 12,750. 12,750. Remember, guys, we're opening up here. We're opening up here. So if the market's going to see a big breakdown today, that is a lot of range to travel. That's plenty of range to travel. I don't really think that we want to be looking for lower targets anywhere south of 12.7. 12.7 in your NQ, okay? So that's the downside here out of the NQ on a rejection of our resistance trendline. We just talked about opening close to this zone in here. I think all of that makes pretty good sense at this point in time. We're also just looking for a rejection because remember, we're opening in this zone. We're looking at this as a break, retest, continuation in the downward direction, right? If the bears are going to confirm the move, which again, From an internals perspective, the bears did show up yesterday. The bears absolutely showed up yesterday. This little rally into the close, it was driven by earnings. So I'm not going to say we're disappointed in the bears. I'm not going to say we're disappointed in the bears this time around. It's different. So lower highs here, fade off the open. Lower highs here, do not get above the overnight high. Lower highs here, just stay underneath the previous high of day, 13,000. If you want to use a nice easy number to watch, as long as we're printing a 12 something out of the NQ, bears remain in control for a break and retest of this range, finally giving us some opportunity for continuation in the downward direction. That's what we've got in the NQ. All right, let's go 15-minute time frame chart, make a brief assessment of some of the 3 questions that we are always concerned with, and then we'll move along to the Russell and keep the train moving right along. So where are we opening in relationship to, NQ, what the heck? Sorry. Just the way that this zoomed kind of threw me off there. Let's try that one more time. There we go. That's a little bit better. So where are we opening in relationship to the 3 questions? Number 1, firmly inside the previous day's range, obviously. Even if you don't want to count the last 15-minute period out of futures, use this as your previous low of day. Nothing really changes there. We're firmly inside the prior day's range. That's a neutral indication. We're firmly inside of balance, which is a question number 1.5 value area reference, of course. Right, we're firmly inside of value area, neutral as well. Question number 2, we're off the overnight high, we're off the overnight low, kind of in the midpoint here, neutral. Question number 3, overnight inventory position. If you extrapolate the settlement here, how much time above, how much time below, a little bit more net long out of the NQ. So I would say, let's just go with, again, very neutral still, but like 60% net long. What does it tell us for the open? P for patience, wait for an opening range, whatever. We want to see a fake break and then fade off of this level, overnight high, prior high of day. We just talked about that on the hourly chart. Opening range that just breaks down is also tradable, considering that we've already rebounded to try to find the hourly lower high. Hourly lower high is being found on the open. By virtue of the open, by virtue of retesting the flush point, that's kind of forming the retest that we were just talking about. Okay? So opening range that breaks out, very, very skeptical of that, not looking to long a break of the opening range, looking instead to see where we start to see first signs of resistance, rejection. Ideally, it's underneath 13K, and then we look for the rollover and we trade short. If you're not comfortable spotting let's again clean that up a little bit. If you're not comfortable spotting the rejection up here, again, what you want to look for is just very simple. Inverted hammer candle, double top on smaller time frames, but regular head and shoulders on smaller time frames, short under the low, short under the neckline, short under the neckline, right? Whatever. If you're not comfortable taking that trade, then the next logical trade to take is a move through the opening print in the downward direction, perhaps underneath the opening range low, right? You break the low of day, and then there's a couple of entries. Aggressive traders short this. More conservative traders wait for an intraday retest and short this lower high. Really conservative traders confirm that we are forming a new downtrend underneath the bottom of the previous low of day. Then you short the new low of day after the first retest, right? But just remember, as you wait and wait and wait and wait for more confirmation, your risk reward just gets worse and worse and worse and worse, right? If you're like, okay, I want to wait for the next lower high, right? Now you're dealing with your target just gets smaller and smaller and smaller and smaller. So anyways, you can wait for however many infinite layers of confirmation you want, but just remember the risk reward always has to make sense at the end of the day, and your target gets smaller as you wait and wait and wait and wait for more confirmation. Okay? So that's the NQ. That's what I've got for you. Let's take a look at the Russell. What's going on with the Russell Futures /RTY? Just as a friendly reminder, RT and Y are all next to each other on the keyboard. Don't you forget it. 4-hour time frame chart is severely breaking down from the micro balance. Remember that this is a micro balance and an overall balance here. And we're coming into support. So one thing I would say about the Russell, I was going to say IWM, we'll get to the IWM cash market in just a second, is that obviously we're not close to retesting this. So this is more similar to, I would say, the analysis of the ES. I mean, positionally, it's not the same. Positionally, the ES is testing like this or whatever. But, from a trade analysis perspective, like what we're doing, we're opening at the bottom end of the range, and we're already forming hammer candles on the 4-hour chart. The buyers are trying to step up here in the after hours. So noting on this chart that we're still stuck in the overall range, is it logical to be a brand new money short as we're coming to test support from the top down? The NQ is different. We're testing that previous level from the bottom up, right? But in the ES and the Russell, we're testing support from the top down. So do you want to be the first short in the door here in the Russell? Probably not. Is it reasonable that after producing a lower low from here to here, we need to search for a lower high? I think the answer to the question, again, remains yes. It is reasonable that the market could do that. It could bounce off of support, and it could look for a lower high. The lower high is just anywhere, ideally underneath this zone in here. 1780 was the level we were discussing, right? So any lower highs underneath are definitely, keep the bears in control, but let's be honest with ourselves. Could we bounce off of support this morning? Absolutely. Let's take a look at the hourly chart. Obviously, if we look at the balance from this perspective, what's the idea, right? Here's a range, here's a break, retest, lower high, and we get continuation. So hourly trend is clearly down with new lower highs continuing to build out, lower lows continuing to build out as well. So we're looking for the lower high. Where's the lower high going to form? Well, let's take a look at the 15-minute chart, and let's look at the previous day's range. We're opening in range, so here's the prior low, in range, underneath value, so it's a little bit more bearish than bullish. This level right here is very, very mechanical out of the Russell in the futures market here. So 1750 could produce a little bit of a pop if it breaks in the regular trading hour session. Very, very mechanical. Look at that. Let's take a look at the, let's go over here. It's probably, yeah, look at that. I mean, goodness. Look at the profile of the overnight structure here with just like, boom, flat, right? That's that mechanical level that I was just referencing. And by the way, folks, we can cover only so many things. There's single prints in all of the previous day's sessions. All right, so there are single prints to be looking at. I'll throw in the ES ones just because perhaps, right? Perhaps your lower high also is confluence of support at the overnight overnight high, confluence of resistance, single prints. Just saying, overnight high, right? Anyhow, going back to the Russell, right? Look at this. So if that breaks, point of control, probably the target. All right. And then, of course, walk your singles, so on and so forth. Anyhow, back on over to the price action candle chart. What are we dealing with? Opening in the previous day's range, underneath value area, slightly more bearish than bullish. Overnight range, opening off of the overnight lows, closer to the overnight highs. It's a little bit more neutral in the context of what's going on here. Again, probably just want to target this chop range from in here. Look for like rejections, and then a flush again gets interesting. So a failure to really hold outside of the overnight range is probably the most interesting setup in the Russell to continue to act as bearish pressure, right? So we get here, we reject back out of the overnight range, and this little move from the prior day's session, and then that's like continued bearish pressure for the broad market. If we're just accepting in here and potentially breaking over these highs to close the single prints, these are the single prints basically, right? If we're closing those, then yeah, it's reasonable to dial back the bearish expectations and think that yes, on a brand new lower low, the market may see a little bit of a rebound to search for the lower high. All right, so I would just use 1755 overnight high as your key level in the Russell futures for all the reasons that we just discussed. All right, that's going to do it. For the futures, let's take a look at the cash indexes. There's Microsoft, by the way. Look at that thing. Run into the upside there. So spiders, let's take a look at the daily time frame chart and just evaluate where we're at from a structural perspective. Again, here is the original balance range. What did we do yesterday? We closed right on the lows. So although, yes, for those folks who are potentially just tuning into the stream, who are potentially brand new here, we're still in the balance area. So we don't want to be overly aggressive on the short side, literally sitting on the lower lows after, this lower low from here to here is what we're referring to, by the way. We don't want to be aggressive shorts here, sitting at a known area of support until we produce a lower high. It could be intraday, although I'm drawing on the daily chart, could be intraday. We're just looking for a lower high to form and then something like this to unfold, right? So, again, it does not make sense to be a brand new money short at 406.15 unless we have clearly produced a rejection, lower high intraday, and then we flush that, okay? If we come blasting into this and are flagging here, I would not be a short through the 406. I would be a short on a break, retest, and then continuation, all right? You'll also note we're sitting at the lower edge of the weekly expected move. I would take that with a grain of salt. Why? Because if this is a compression range, if this is a balance range, we know that markets move from balance to excess, and the market can very easily move through this. This is a suggestion of what the options market was pricing in as of last Friday's close for the coming week's worth of trade. We can easily breach that. It's not the end-all be-all support. It's just a guide, so to speak. It's a guide, okay? So under the conditions, under the circumstances of what the market has done here, if we're going to move into a new phase of expansion, I would not be worried if we break down underneath the lower edge of the weekly expected move. It's not an end-all be-all support, all right? Anyhow, so going back over to the SPY, talking about the key levels that are obviously in play. I mean, 406 goes without saying. You need to have that on your chart. I don't know what you're doing if you don't have that on your chart. It's technically 406.15. I would use 406.15, but 406 for all you round number freaks. And then, of course, we're looking for lower highs under 409. 409 represents, this is like 425, or excuse me, 4125, I should say. This is the equivalent of 4125 on the ES futures that we were just looking at, and the closure of the single prints roughly. It's a little bit north of the closure of single prints. Single prints closing would be right around in here, 408.50. But this, you're looking for lower high, right? This is ideal for the setup this morning. We talked about it in detail for the ES. It would be great if we went opening range because we are technically opening inside the previous day's range, inside the previous day's value, slightly underneath. But with this rally, we're getting closer. So opening range, break the top of the range. Don't long that. I mean, if you're a scalper, you can do whatever you want to do. But I would say the better trade is to look for a short up against your overnight high. Single prints closing. Again, that's 408.50. 409 is a decent level to look for. That's where I would be looking to initiate shorts. Any weakness here for a rollover, any weakness here for a rollover. Those are the two key zones I would say to look for short setups on today's session. If we move through 409 on the upward direction, think about where we're at on the daily time frame chart. We're trading up here. Again, that's north of 409. If we get a green bar today that looks something like this, it's just going to complicate the issue because what does that tell us? It tells us that, there's no, I suppose as long as we're underneath prior day's high, bears are making progress. As long as we're underneath 410.35, we're making progress. Bears are making progress. But if we get a solid green-bodied bar that looks something like this and we're trading over 409 into the close, it's just going to complicate the issue of being stuck in this balance range. All right? And it would be even worse, of course, it would be even worse if the green bar does something like this, right? If this is a solid green bar on today's session that looks, somewhere in the neighborhood of this, closing above the previous day's high, I mean, my goodness, you can, I don't know what you can do, but that would be unpleasant. It would be unpleasant, right? We can all see that. Okay, we've covered the SPY levels. Again, you're looking for short locations at 408.50 overnight high. Also the closure of the single prints, 409. Structure from here. Staying underneath 409 is key. It keeps us underneath the midpoint of the original balance, right? So those are the two key short locations, 408.50, 409, and obviously your flush 406. On a break there, you're looking for the lower high underneath 406. Targets here will become closer to 401. The target we found together on the ES futures is a little bit north of 401, perhaps 402, the gap fill reversal and upper wick from this bar in here. So you're splitting hairs at that point. Daily 50 SMA is there. This area is here. We know the confluence of anchored VWAPs is still here. So that's if we get aggressive underneath the prior day's low. And again, only on a lower high underneath. All right. So that's there. Yeah, I absolutely like what Dave says in the chat here. Dave does the wave. I like that. If this builds out, absolutely. We'll look at it as objectively a head and shoulders. And then just, there's your 406 neckline. Flush it, right? So it's a good point, Dave. But we're moving along. We're taking a look at the QQQ NASDAQ 100. What's going on with the NQs? And once again, we can see a clear discrepancy between the SPY and the NQ. Or I should say QQQ, now that we're talking about the cash market. So there's the balance range overhead. Obviously, we flushed 314. And where are we in the pre-market? We're opening just underneath. So again, this is the difference. SPY is opening above support, testing it from the top down. The QQQ is opening underneath what was once support and should now act as resistance, testing it from the bottom up. So 314 is your pivot on the open. Ideally, in a picture-perfect world, we reject here and we roll over. What does that look like on the daily chart? Well, it's a gap up, so we're opening here and we fade and we get some sort of red bar that complements exactly what took place. Very similar to this interaction right here. See how these two red bars interacted? We test over the previous high in that small upper wick. We fade back into the previous day's range. I'm not even saying that we need to take out the prior day's high in this particular setup because 314 is underneath that, of course, right? So just a test here, maybe some upper wick is formed. It's a quick pop out of like an opening range, whatever. It fails, and that's where we look for that rotation back in the downward direction. So 314, key level on today's session out of your QQQ. We actually don't have, let me go back to the NQ futures. I may have been mistaken about singles in every chart. Yeah, we just have a spike in the NQ at the lows here. We don't actually have singles intraday, barring this one minor E period right there separation. I would not read into that as a make or break for this market. And instead, just take this thing at face value. We're opening near the point of control. There's no single prints to rotate through. Again, it's 314 on the QQQ. 314. Just watch the horizontal level. It's very, very simple out of the Qs. Anything that never makes it there in the first place is just by virtue of not making it there a lower high, right? So look for, bear flag setups. Hopefully shorts can capitalize on that momentum. Look for, it could just be like some sort of range that develops, break, and then retest underneath the flag range, right? There's a number of ways to trade these things. There's a number of intraday setups that form, but for the most part, if we're under 314, the bears kind of have the edge here out of the QQQ, and hopefully you can see why. Balance range breakdown. Now, targets underneath the prior low of day. We're opening quite a ways away from the previous low of day, so don't assume that we're going here automatically, but if we get there later on, let's say that the morning session gets us there by noon or something like that, and we start to flush again into the close of the session today, it's all about the gap underneath us, right? We talked about this in the NQ. That's the same area. It's the equivalent of that same structure, okay? So under 310 prior low of day closes down towards 308.19 roughly, all right? So that's your QQQ. Let's take a look at the IWM. What's going on with small cap land here? Again, we are breaking from the micro balance, but we are still in the major balance. Micro balance, major balance. In terms of where we're opening, you'll note that there's a little bit of divergence between the IWM cash market and RTY futures. In the Russell futures, we're opening, towards these lows, closer to 171. Obviously, we're not quite there in the IWM. I suppose that's why we were seeing 4-hour hammers on the Russell futures here. But for the most part, again, what's the idea? We've just broken from balance. Have we doubled this range here in the IWM? Yes, we have doubled the range. So the target has been fulfilled. We're opening towards support out of the major balance from the micro balance breakdown. So do you want to be overly aggressive as a new money short as we're coming into this area down here? Probably not. We're sitting on a brand new lower low out of a 30-minute or hourly time frame chart, right? We have lows, lower lows were produced. We're opening on these regular trading lower lows. Remember that the pre-market sessions don't count for as much, right? They don't count for as much. Why? Volume. So simply put, we're opening on these lower lows. Is it reasonable that the market has to search for a lower high here before continuing in the downward direction? I think the answer to that question, as we've really hammered home here, is yes. So I would not be a new money short out of the IWM. I would just use this as a market indication for the day's session. If we're accepting inside of the previous day's range, then I wouldn't be overly aggressive on the short side in the SPY or the Qs. If we are not accepting in the prior day's range, if we do this and then fake out to the downside, right? We talked about this micro balance. Again, you could get, everything's fractal in trading. So I hate to use the same words over and over again, but it is what it is, right? This is a micro balance into the close yesterday out of the IWM, little period of chop, you could call it. If we get into it and then fail out of it, that's probably your stronger indication that, hey, things aren't looking great for the broad market. Here, the IWM failed to produce much more of a meaningful lower high, which could come up as high as retesting the bottom end of balance here, right? Daily chart could afford this. If we reject here, we know the deal, right? That's probably where your more bearish implications come out for the broad market as a whole. So watching the back test of this little zone in here, 173.50 zone is what you would use out of the IWM. So keep it simple here, in the prior day's range, out of the prior day's range. Bullish, or at least neutral in the prior day's range, I should say. Bearish in continuation underneath the prior day's low. All right, that's the IWM. Let's take a look at the core list of companies here. Anything interesting happening in Apple? Absolutely. So yesterday, we were looking at what at first was looking like a pretty darn good bull flag over the breakout of the previous hammer high. It was looking pretty darn good on the hold up over 165.50. Unfortunately, if you're in the Discord, you knew that we said this. There was a flush point building here on the back half of the break back down underneath 165.50. And we said, hey, Apple flush of those lows probably brings in more downside. And, we happen to be on the right side of that one. And I just want to, I hate talking and not, for anyone who's not actually in the Discord, let me just show you. That way you don't think I'm talking out of my nose here. Apple, you can see right on this little, oops, why is the cursor acting weird? There it is. Right on this little time blurb, timestamp is 11:05 as this is forming, right? Where's 11:05? 11:05 is here, right there. Apple watching the 5-minute range that's in place back underneath 165.50. That's right here. I don't know why the cursor's acting funny. With the broad market weakness, this could be a bear flag flush. Look at the first hourly bar that's closed, right? So anyhow, and then again, there is your note that the ES and the SPY were coming in for ideal lower highs, right? So anyways, whatever. You can either join the Discord or not. It doesn't bother me one way or another. It's completely free to join. Come hang out with us. Anyhow, Apple is underneath that level, right? Apple broke down from this little flush point in here. It produced a bearish engulfer on the previous day's session. We know that tech earnings aren't looking great right now outside of Microsoft. So is it reasonable that we see downside as we stay underneath perhaps the previous day's low? I think the answer is yes. As we start trading or spending more time underneath 163.30, or 163.80, excuse me, I think that there's more of a reason to still lean on shorts out of Apple with another rejection of the overhead range in this upper wick, a closure underneath the previous day's low, right? This is kind of what we're looking for, 162.25 on the downswing. So Apple looking for continued, I would say ideally we just stay underneath this zone. What is that? 164.50. As long as we're south of 164.50, I think that the higher odds are for a short trade out of Apple. South of 164.50, looking for rejections, continuation in the downward direction. If we just move above that level and start chopping around in here, it's exactly that. I don't want anything to do with it on a reattempt of getting into this range here. Okay, that's Apple. Next up, Netflix. What's going on over here? You can see that we're dealing with a little range, but we did get the flush of the inverted hammer low. We discussed this in the pre-market live stream yesterday, so that everybody saw that one, hopefully. Nice little push in the downward direction, but let's be mindful of where we're opening. This time we're opening at support instead of resistance, and there is no setup bar to take this thing long over like a hammer high, for example. So I would not be enthused about new money shorts out of Netflix. The move was yesterday. We're opening on a gap down. Gap rules are in play to close the overhead gap and then look for a potential rejection there. But again, I would not be a big new money short. I would keep it to scalps only, noting that if you think of this as a range, we're opening at support. So Netflix, keep it simple. Next up, Tesla. What's going up with Tesla? Coldest blade. Love to see it, man. Execution's killer. Love to see it. Congrats. Tesla. What's going on here? Tesla is really, I think like the most interesting thing for Tesla would just be a flush of this 159 to get continuation in the downward direction. I'm not thrilled with the daily structure here, right? So the hammer candle sweeps the 2-bar lows and then closes back in range. Yesterday we poke into range, right? This is looking pretty good. And then where do we close? Back down underneath range. Now we're opening right at 160. Like, not really thrilled with the structure based on what's going on here in Tesla. I think the better trade is just like get this thing out of the range, flush the 2-bar lows here, target the gap underneath. So 159, that's a patience move out of Tesla. I mean, you could see, right? 30-minute bars can easily travel that distance. It could be in play in like the first hour of the day or so, but we're just not there yet. So it's a patience move out of Tesla. We're just opening too centralized in this choppy, messy chart right here, right? So flush of the 2-day lows, give us some continuation. Long's not even favorable until we get up and over 167.20. So patience out of Tesla. Next up is Google earnings, right? So let's start talking about some earnings implications. So here it is. At first, really positive, fading as I'm sure the competition between the AI, Microsoft stuff perhaps really heats up or whatnot. Where are we opening? That's the key. We're still just opening inside of the previous day's range. So all of this wild volatility to open inside the previous day's range. Let's just think about this objectively. If you traded options into the move here out of Google, if you were trading any options into Google, the IV was it was through the roof, right? We get this move. You're like, "Oh, great. We're going to get paid on the open. We got more than the expected move." Oh, no, right? Moved all the way down here. Now you're opening inside, right? So shorts thought they were good. Longs thought they were good. We're opening inside of range. Everybody's disappointed. Everybody's disappointed out of Google. And where are we in relationship to the daily time frame chart? We're opening in this chop zone right here. 104.50. 104.50. Virtually unchanged. Virtually unchanged. So what does that leave us with for the open? A very, very clear set of rules to follow. We're breaking down underneath 103.75, and you can look for the lower high underneath to enter that trade. If you're aggressive, you can just take the flush of it. Or we're looking for the break over 106.50. Aggressive traders take the break. Conservative traders wait for the high or low above. Very, very simple out of Google. Do not overcomplicate this. Do not get caught off guard in this range. Another prime example of why you should not swing trade long options directionally through earnings. Just an absolute disaster. Absolute disaster for anybody who tried to swing that. Anyhow, moving along. Metaverse, Zuckerberg's Fantasyland, earnings after the close. IV will be through the roof here. Again, full transparency, I will not be trading this today just because of the implied volatility nature. If you do want to trade it, the technical setup is to look for a long trade out of Meta. Why are we looking for a long trade? Because this trend here is overwhelmingly in the upward direction. This is a break. This is a retest. Now we're looking for high. What the heck am I saying? We're looking for movement in the upward direction off of the retest of 207. All right, so we're opening. Is this a gap yet? Yes. Yes, it is. I don't know if this is just because of Microsoft and Google making initial impressions in the upward direction. I don't know if earnings leaked here or what. I have no idea. I won't be trading this, but we are gapping green over red. That's always a fantastic setup. Unfortunately, earnings are probably going to screw up the chain too much for my liking. I'll take a look at it, but 9 times out of 10, I won't be trading this. Gapping green over red. If you are interested in trading it, I would be looking for something that comes here, 213.50. All right. And then if we move through it, of course, you know the deal. Higher, low, above recaptures this area of resistance. Good to go. Continuing to move in the upward direction. Overall uptrend, reasonable pullback, looking for continuation. All right. That's Meta, and we'll see what happens after the close. Next up, NVIDIA. NVIDIA. Of course, supporting off of support. Who would have guessed? Who the heck would have guessed? Supporting off of support, obviously you've got your Microsoft AI earnings closely tied to NVIDIA. They have not reported yet, but the idea, of course, is just that with AI on the rise, NVIDIA is a AI component now, I guess we can say. The mania continues, and we're opening up towards these highs, completely negating the red bar from yesterday. So the question becomes, do we see a move over the top of the previous day's high, in which case anybody who got short here is dead underwater as that happens. So NVIDIA, I would watch the previous day's opening print, 270.75. If we're above 270.75, I think it's very difficult to be a short in NVIDIA. And you could say whatever you want. You could say the momentum is here, that's fine. We technically did break the 2-bar lows, but where are we opening? We're opening above the 2-bar lows. We're opening at almost the open of the previous day's bar. And overall, if you think about this as a balance range, we're in the midpoint of that range. What would have been more constructive for the sellers? Opening low and weak in this bar, flushing the 262, turn this into overhead supply, weighing on the market in the downward direction. We would have targeted 242. It's just not the case. It's not the reality of the situation. We're opening too far away from that for it to really be in play here on the open. Again, if you look at the average range of 30-minute bars, we could get here again. We could definitely get there again if there's no recapture of the previous day's open, but I don't think you have a structural edge trading back in the midpoint of this range after evaporating all of the shorts that were piled up here into the close. All right, so I think that this is a difficult chart. Next up, Softy. Earnings. Talk about an impressive move. Here. Flush. Thought it was overhead supply. For day trades, it was great. It was great, especially on the first initial break of this here. Not so much yesterday unless you're aggressive. I thought maybe there would have been an opportunity here. I think that the broad market offered better opportunities. That's neither here nor there. For today's open, where are we opening? Break of balance. Oh, would you look at that? We're opening not only above the top of balance, we are opening above the top of this range and previous resistance coming from off to the left at 294 from right around over here. So what an impressive move out of Softy. The AI mania continues, and the stock has been well rewarded. So I hope you own some in the long-term account. I hope you stick to your investing plans. and you're always dollar cost averaging into names that you believe in, and this is kind of why. So what do we do from a trader's perspective? This is a massive gap. The gap rules are in play here, but I think we need to remember the gap rule that says gaps that are larger than what's typical oftentimes are very difficult to trade. So I would not be gung-ho about anything that's like, I think Microsoft's going to be a difficult trade to pull off, quite frankly. I think that this is going to offer, you're going to get people who want to sell this thing, take some profits. Anyone who is long from the gap close down here, anybody who's long from this entire move from a more fundamental perspective, people taking profits, money managers rotating in and out of things are going to want to take some profits here, whatever, on the earnings pop. You're going to get some selling pressure because of that. And you're also going to get the flip side of the coin. Folks who missed the move who are now saying, oh, look at this massive gap up. I've got to buy this thing on the open. Money managers who are like, okay, this thing's going to get an upgrade. The revenue beat from the AI implications are fantastic and massive for the future. There's too many conflicting parties trying to get involved on the upswing here because of the size of the gap. There's too many people who are going to be experiencing shock and awe. You're going to get shorts who are going to get annihilated here on the open, who are closing out, adding buying pressure. You're going to have new money shorts entering this thing saying, hey, this is an opportunity to just short it at a higher price point, right? I don't exactly know how this wants to resolve on the open. From a purely technical perspective, I would just apply the gap rules. I would say if we're failing the overnight high and we're underneath the opening print, the only logical thing I could see is looking for some short opportunities to have this thing fade off a little bit and come back down to quote unquote earth. But even that, I'm not so confident in, just based on the size of this gap. All right? I think it may be a difficult one to trade. So do with that what you will. If you want to trade it long, if you want to trade it short more aggressively, that's totally your prerogative. I think that focusing on the broad market today, for me at least, knowing myself, will be much more fruitful. Activision, of course, getting blocked as well. Not really helping there. Amazon, what's going on? Apologies for the sniffle. Amazon. Back inside of range. Again, earnings have not been released yet, but based on Microsoft, you can see big move in the upward direction. We're gapping green over red, green over big red, back over 105. This is interesting, right? So anybody who shorted Amazon yesterday is going to be short in the hole. Probably going to get squeezed out on the open as long as we hold 105. Key pivot, 105. Very, very simple. Don't overcomplicate it in Amazon, 105. All right? We hold 105, look for the squeeze to happen in the upward direction, target overnight high and this previous structure 108. That's a possibility. If we fade 105 and fall underneath, I think it's a patience play until we're back down underneath 103.90. Right? It would be here, targeting this support perhaps, and then a lower high underneath is more important. More important. That opens the door for this rotation, 101.25. All right, that's Amazon. That's the core list of companies. Let's go back on over to the ES, and we'll take a quick, I suppose we could do the poll. Ooh, look at this little nasty move in the downward direction. Look at that. Interesting. So if you think that the market is going to rally off of the 4,100 support, let's see a number one in the chat. We'll do a very, very quick poll. If you're a little bit more neutral, thinking that it's a lower high off the overnight high, but still finding support off of 4,100, really neutral, just consolidation in the lower half of the previous day's range. Let's see number two in the chat. If you are a bear, thinking that we go here, lower high, and then continuation in the downward direction, let's see number three in the chat. You are a bear, looking for market to go to hell in a handbasket, and we will break down from there. So very quick poll. We'll let that simmer. We will let that simmer. There's really no update to bring to the ES analysis here. We're still opening in striking distance of this 4,100. We were starting to open inside of value area, which would have been more of a neutral implication, but now that we're falling back out, it's slightly more bearish, but nothing crazy there. That's that. All right, so I'll let that simmer, and in the meantime, we'll just go back on over to the QQQ as well. A little bit of fade, so still underneath 314. SPY getting closer to that 406. Remember, the closer we open to 406, the closer we're opening to that lower low, and the more you're getting short at terrible location, right? You want to get short here. You want to get short here, not here. All right? So with 9:25 on the clock, I think that's basically going to wrap up the stream. I appreciate every single one of you guys coming out and hanging out with us here this morning. I think we may have gotten in the weeds with too many things here this morning because I still find myself at 9:25 wanting to scroll through the chat and hang out. But unfortunately, it's just that, the market's about to open. So we got to run, but maybe we'll be a little bit faster through tomorrow's session. All right, and I'll be a little bit more attentive to the chat, and we can hang out. But 9:25 has struck the clock. We've got 5 minutes to go until the bell. Thank you for tuning in. And with that said, join the Discord if you're not in there already. And we'll see you in the next one. Remember, 8:15 tomorrow morning. I will see you all there. Have a great trading day. Stay green. Drink some water. Drink some coffee. Have a great day. Have a great, great day.